Hong Kong, Taiwan are the two markets which are managing to trade in the green.
Supports come in at 19,922 and 19,794.
Inflation lower than expected, industrial output better than expected.
Look at the mid-caps, down about 60 odd points.
Something like this was waiting to happen, I would say, but I don't think it's anything unnatural or,
Traditional vehicle to e-vehicle. So this industry is expected to grow at very high rate.
The last order for 6 submarines, which was a firm price of around 2011-2012. This was 20,000 crores.
Sell rating on the stock with a target price of 31.10.
Well, yes, $92 a barrel is a new 10-month highs for the crude oil prices.
I mean, it's only the first 10 days of September, but given how vegetable prices have behaved, we think that the reading could be sub 5.5%.
The mid-cap index is down close to about 1%.
HTM, how much I will hold to maturity, used to be limited at 23%. Apple, during its annual Wonderlast event, launched a series of upgrades for its iPhone 15 series.
With the mid-caps underperform and the bank Nifty higher by around 0.7%. That was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Nigel D'Souza and Surpi Upadhyay. Well, guys, the mid-cap index is now back in the green. At one point of time, we thought that, it's going to collapse and it was showing signs of weakening. But look at the way the mid-cap index has come back, recovered 1.5% from the day's low. But the day belongs to banks.
But Reema, that recovery really, I don't know, I didn't think that there was a collapsing sign because if you remember when we were doing trading hour, the recovery started then.
It started.
It was a one-way move.
Closer to 10:30.
Exactly,
it
at that
started
point in time.
declining, and then there was a bit of a worry. The mid-cap index was down close to about a little more than 1%.
I think, the market's given a very decisive view today in terms of what it's thinking and which way it wants to head.
Well, it's inching towards 20,100, and banks, Nigel, look at the way the banks have come back. The Nifty Bank is now 1% away from its lifetime high levels. The PSU banks have surged close to about 3.5-4%.
Well, that's right. Early this morning as well, we made this point that it's going to be the Nifty Bank that the bulls are going to count on. Why? Because the Nasdaq overnight underperformed, so the IT index would be under the weather. So you'll have to look at the Nifty Bank. And the Nifty Bank, the next 60 minutes, it promises to be very, very entertaining. I say that because today is the weekly expiry that plays out. Now you have more fun because you don't have the Nifty and the Nifty Bank that play out their weekly expiry on a single session. You have them over 2 days. So Wednesday belongs to the Nifty Bank. So the last 60 minutes are going to be very, very crucial. And I'm just looking at the options data. The 45,800 odd mark, the put that is very, very active. It's added more than 1 crore shares. So that's very, very active. Traders are betting on that 45,750, 45,700 holding out. But on the upside, the 46,000 call, well, that has a fair bit of open interest. It's the highest open interest on the upside. So the levels we're looking at, we're in that vicinity. Yesterday's high and today's high. Yesterday's high, in fact, was at around 45,900. And today's high as well should come up for you on the screen. So we're in that vicinity. If we can get past this 45,950, get to around 46,000 odd, positioning is such that we don't get past that 46,000 odd mark. So we get past that. The Nifty Bank could be the leader from here on, and it could take the Nifty even higher from here on. We've been making this point. If the Nifty Bank can get to those all-time highs, which is around 1.5% away from here, the Nifty could be on its way to around the 21,000 odd mark. So that's going to be the driving factor from here on.
Just one point I want to make about the kind of mid-caps that have recovered today. Railway stocks still haven't, but the market's decided to move on to some other names, particularly like PSU banks. Let's just pull up the intraday chart on some of these names like Aircon, Railtel, RVNL. This is not where the recovery has set in. These are stocks that are still sort of reeling under pressure, 2, 3, 4, 5%. The cuts are not as deep as yesterday, but the recovery is also not as pronounced. They're not seeing green, the railway names. The ones that actually are seeing the buying today, again, as Nigel said, it's really all about banks, and the market seems to have made up its mind that that's the next leg, perhaps, both on large caps and on the mid caps. So look at J&K Bank, look at something like a PNB, Central Bank of India, IOB. It's really the banking names, both on the PSU side and on the private side. That's where the gains are coming in. Then you have some other names like Granules, for instance, is up and about. In the PSU side, SJVN is one stock that's managed to rebound. We saw some profit taking, but it's a rebound today. Okay, Nitin Gadkari, the Union Minister, is making some more statements. Makes 6 airbag rule for cars
mandatory. I think one of the stocks that could be in focus is Rani Madras. If I look at that, the intraday chart is telling you that the street is reading that. The hope is that it becomes mandatory, and that's why that stock was running along. One of the products I think it makes. We'll have to get further clarity. But I think, the intraday chart is telling you that Rani Madras has come down. We'll have to see the liquidity as well. But I think that was one of the plays on this rule getting implemented. So that's why it's reacting in that sort of a manner.
Okay, that's a great insight, Nigel. Thank you for that. Yeah, it's a sharp reaction now. If we don't have so many airbags, then maybe lesser business for this one company. Rima?
Okay, let's talk more about the markets right now and find out the best way to trade. Let me invite Mitesh Thakkar back on the show with a few closing strategies. Mitesh, you've been firm with your bullish view on the markets, and now the Nifty is almost at the 20,100 mark. Midcaps are back in the green. The Nifty Bank is up 500 points. Would you recommend a buy call at these levels on any of the indices?
We've been trading with long bias, but haven't traded the index. Yesterday with that fall, we kind of exited the index position, waited for lower levels. But on the stock side, we clearly had long positions, so that's benefiting us. So buying now, I think, I'm not very sure whether I want to take a position now. Because again, we're getting close to hourly highs, and which means that we are back to very overbought positions. But on the stock side, I think there's a lot of opportunity happening. A lot of stocks which went through some kind of correction in the last few days as the large caps were underperforming, and now propelling the Nifty. So while the Nifty is at the new high, the large cap stock segment, I think, there are many stocks which are not at the new highs and given a chance to trade. I have, in fact, Bajaj Finserv as a recommendation. Recommend buying here with a stop below levels of 1535 for targets of around 1600. And Bharti had a fresh breakout. I think that's getting past the earlier swing highs. So that's a buy with a stop just below 890 for targets of 950.
Bharti has been quite the mover, and Rima will tell us a lot more about this very, very interesting journey, 900 plus on the stock. That's coming up in just a bit on the show as well. We will also welcome, and thank you, Mitesh, for the calls. We'll come back to you in about half an hour for more. Prakash Diwan is joining us on the show today. Prakash, good afternoon. Good to have you on as usual. So much has happened, right, since our last chat. 20,000, then the fear, the shakeout, the fall, and then the recovery today. What do you think? Mid-caps, have we seen? I mean, yesterday was just that one-odd shakeout. What happens from here on mid-caps and small caps specifically?
Good afternoon, Surbhi. Absolutely. I mean, it was hardly some time that we celebrated 20,000 on the Nifty, and then yesterday's reality check. And that's exactly what I would believe yesterday was. It also kind of was a precursor to tell you the texture of the market specifically on the micro, small cap, mid cap segments. The overbought situation that we were sensing kind of started showing its true, significance or possibilities, and that's what's going to happen. Look at once you understand the reason why there was so much of the sharp and sudden move in the small caps. It's primarily because of low floats in most of these names. And that's exactly why certainly the market would have woken up to the reality that the exit door is not so easy to kind of avail of whenever something goes wrong. And there was just half a reason possibly in the market. There's no explanation on any change or fundamental trigger, nothing of that sort. So I think the shakeout that was very healthy. And you'll probably see a little bit of a churn, some sort of new names coming up, and the old leaders and performers would probably sulk for some time because they won't have, investors won't have the gumption to buy those stocks, after seeing yesterday's price action. So my sense is if you have to pick something in the small cap space, it'll have to be names which probably are still undervalued from a flavor perspective, and still give you enough strength in terms of visibility of growth and earnings. But very clearly, large caps are what seem to be very, very promising, and that we've been talking about this whole shift for portfolios to be kind of get into large caps, a bit more weightage, and then that might not hurt at all. Because remember, even at 20,000, the Nifty is not beyond its long 18 times PE or whatever we've seen in the past. So with the 1,050, 1,060 EPS estimate for FY24, you still have the Nifty at not a zone which is kind of very scary. So I would believe Nifty has enough constituents which will do well. The junior Nifty has enough to make money on, so no need to fret. But you'll have to move up the market cap ladder. And again, I'm not bunching the small caps as one segment should be. It's more of stock specific activity that you need to look at from a float perspective, from an earnings visibility perspective, and then take your call.
By the way, the PSU Banking Index, which is the star in today's trade, it's up 4%. This month it's rallied 10%, yet that index is still 10% away from its lifetime high levels. The lifetime high level on the Nifty PSU Banking Index was 5375. 5375, which it hit in November of 2010. So about 13 years ago. And the stock index is still about 9% away. Prakash, maybe the next theme the markets are going to latch on to will be a continued rally in some of these PSU banks. They've done well. Their performance has been very strong. If you had to pick one PSU bank, which one would it be?
I would reiterate my call on Bank of Maharashtra. It's one of the smallest of the lot. It's nothing very significant. It's not in the top three that get talked about. Every time we talk about SBI, PNB, BOB, the same breath, and they behave in a similar way. These small banks, remember, are semi-turnaround, semi-growth kind of opportunities. So the turnaround is primarily because, and we saw that in the last quarter, and I've been talking about this. While it's kind of done about 30% post those numbers, there is still enough headroom for it to grow at this clip without getting stretched on any of the parameters. The balance sheet probably has the ability, the wherewithal to continue that growth. It's a company, it's a business that's, the footprint is so uniquely placed that it will start growing as you see improvement in the demand side on the rural economy, the kind of traction coming back in some of the smaller segments, smaller geographies of the market. And that's where it's present. So and the government's dilution that had happened when it was under, big cloud of crisis a few years back, that's also kind of, after the QIP, it's kind of eased out. It's become much more healthier. So any potential divestment plan that the government might have, we speak about IDBI Bank in that grid, but it could also be a bank like this. Because there'll be enough takers for this the right size of sorts for an acquisition. So I think it's good. But of course, all PSU banks will probably rally given the way things are moving. So that is a pocket that you could definitely make some money on. But from a longer term perspective, you need something which continues beyond, let's say, year plus, and that's where this bank would probably feature better.
Okay, all right. Prakash, I wanted to ask you about this airbags story that just came up, on the screen. But for the time being, let's pull up a few stocks. ITI, the stock has been doing very, very well. I think Rima was highlighting some factors earlier this morning as well. The stock was down, by the way. It was down 4 to 5%. It's erased all of those losses, and just take a look at that move. Massive volumes. It's moved to the high point of the day as we speak. And a couple of other names as well. SJVN as well has moved up now as we speak. Currently at the high point of the day. But Prakash, I wanted to ask you about that airbag story that was flashing on the screen. Transport Minister had said that they don't want to make 6 airbags compulsory in cars. I think some part of the street was hoping on that front. My just guess is that, or what I remember of last is Rani Madras is one of that, the Rani Group companies. Yeah. Uno Minda, I think through one of their associates, they have some kind of exposure. And otherwise, it's more privately or it's, imported, I think, from Japan. What's your view on this? Does it have any kind of impact on the listed space? It will be rather small, I think so, because there's no core airbags player.
No, absolutely. So, there's one company, I can't recall the name, which is a, Dow Chemicals owned company, which makes the chemical that goes into making polymer for these airbags. But notwithstanding that particular thing, even the listed names that you mentioned, while they have a presence in the airbag, it's not that their core business is airbag. So there's no reason for them to kind of, get to be disappointed with the market. Could probably, they have enough levers for other growth areas. But what's important to understand is that this whole ancillary space, Nigel, is the way it's kind of evolving. OEMs would probably, start looking at suppliers who are fairly critical to their growth. The kind of new designs on EVs or even the newer SUV models that are coming up. You will have to look at a very separate segment of ancillary suppliers who will probably benefit or grow faster than the rest of the market. So the conventional approach that somebody supplying to a Maruti, so they would have to grow. So seats, seat covers, or tires are not going to grow with a little bit of a delta. What's going to grow is somebody who has something specific, and there's a huge segment of Indian auto ancillary players who actually export. So that I think is a very promising space, and some of the names that I've been reading up on and which seem very promising, not discussed as much. One of them is Uniparts. which is a small company, came up with an IPO, has a very specific application on assemblies in off-road vehicles globally. So those are the things that you would probably look at.
I think the other company that you're talking about is Multibase. The Dow,
Yes, that's the one. That's the one. Yes, that's the one. Multibase is the one. It's a small company, but very specifically mastering that the airbag chemical polymer manufacturing. Yeah.
Got it. Okay, so that's about the auto ancillary space. But Rima, Bharti Airtel, that's dialing in, right? Making fresh all-time highs. Tell us more. You've done some data analysis over the last few years, and why exactly the ARPUs? I think they've been talking about 300 for a while.
Yeah.
But give us the broader picture.
So just to go back in time, right? When Reliance Jio launched, which was almost 7 years ago, 5th of September 2016. So 7 years back is when Reliance Jio launched. Before Reliance Jio launched, the ARPUs of Bharti Airtel for the India business were about 200 rupees. Okay, then Jio launched. With its aggressive pricing, we saw the ARPUs drop. The ARPUs halved for Reliance Jio. They went down to 101. They just missed that, double-digit mark. They halved. And since then, in the last 5 years, the company has been taking a lot of steps, to improve their ARPUs. And finally, in the quarter gone by, the ARPUs after 7 years are back to where it was before the Jio onslaught. Also, to put some more numbers in comparison, right? What happened in the 7-year period? Well, the revenues continued to move up. So revenues were about 15,000 crore rupees for the India mobile business only. We're not talking about the consolidated business. We're talking about the India mobile business. Were about 15,000 crore rupees. They went up to 20,000 crore rupees. But what the company focused on was improving margins, bringing in efficiencies. And look at the way the EBITDA margins. They couldn't control the pricing. Pricing went down. It's an industry phenomena, but they worked on their margins and improved their margins to nearly 55%. Steady improvement. And now also because of other factors like Vodafone Idea weakening, its subscriber growth continued to be very, very steady. So they worked on the margin bit and they worked a lot on pricing. Very often the company was the first mover in upping the pricing, right? You don't want to take the chance of increasing pricing and the risk that if others don't follow suit, I could lose my subscribers. But yet the company very often took that step in upping their pricing. They focused a lot on their postpaid subscribers, which is where if you manage to upgrade your prepaid subscriber to postpaid, straight away your ARPU goes up 70% on an average. If you move, you try and, of course, smartphones also played a big role because the minute you upgrade from feature phone to smartphones, there is a big ARPU jump, right? International roaming got simplified. So the company took a lot of steps to get the ARPUs back to the 200 rupee mark, which is where they started with, right?
And no taking away from the fact that in the face of a challenger like Jio, nonetheless, I mean, nothing smaller than that, to be able to come back. And that was, I think, it was beautiful data that you said from 200, half to just about 100, back to 200. It's been a phenomenal.
And now they're looking at 300 rupees, right?
It's medium-term target.
Medium-term target, long-term target.
But 300 is something that they've still put on the board. Let's ask Prakash. Prakash, 900 on Bharti today. You think 4 digits is possible on the stock? And if yes, in how much time?
So the fact that, from that 101 to 200 move has brought the stock from 550 to 900, you just need another 10-12% of ARPU change to make that happen, right? I mean, I'm just making it very simplified. But, what happens is the market starts paying attention to the growth in the underlying parameters, the unit economics, when the price moves that. So it should have been the other way around. And my sense is, Bharti is very calculatedly waiting to, let some of the developments happen in the Jio front because it's now a very bipolar market in that sense. So competitively, if the Jio Air Fiber launch, which is imminently due on 19, they would kind of, have to see what is it that they want to focus on. Because Jio's attention my guess is, will probably be on expanding subscriber base through that particular offering. And Mr. Ambani spoke about they could add almost 150,000 subscribers in a day, which is phenomenal in terms of a growth rate. So Bharti will probably wait for that, and that's when you will have to see the next leg of 1,000 definitely. I mean, I don't see any reason why if they do the right things, the organic growth itself will not pull them up. But it's more of a long-term story that you need to look at. The journey from 200 to 300, whatever time it takes, has to happen. It's just a matter of when, not if. So 1,000 definitely could be very real in some time.
All right. In terms of valuation chart, I think the EPS that the street is factoring in for this year is around 26 rupees. And for the next year, they're factoring close to around 40 rupees. So in that sense, it currently trades at a forward earnings of close to around 23 times. These are Bloomberg estimates.
You know, there's one more thing that
Yeah.
people are hopeful, that the company will start paying dividends. Now, it's not paid dividends because it had so much debt.
Capex, so
Right?
much 5G rollouts.
Capex. Now, 5G Capex has been front-loaded by the likes of Bharti and Reliance Jio. So at some point, the 5G Capex will taper off. And plus, the debt is now coming under control with the moratorium. So they have cash. It's just that cash has been used to pay off your spectrum and other costs. So now will the company at some point of time start looking at paying dividends? And if that comes through, that'll be another trigger.
Oh, absolutely. Got that. So Bharti Airtel are really making waves today in the market and over the last couple of weeks and months as well. We'll take a quick break on that note. On the other side, of course, we keep talking about more themes and more stocks. Also, Anshul Sehgal will be joining in. He is, of course, from Kotak PMS. We'll discuss some market themes with him as well. Welcome back. Looking at some more stocks in focus today. And Indigo has been under pressure as the engine issues perhaps continue to weigh in on the company. Sonia is here with the details. Sonia, what is the latest?
Well, thanks a lot for that. Indigo continues to be in focus on the back of the engine issues that Pratt & Whitney is facing. Now, RTX, which is the parent company of Pratt & Whitney, has come out with a statement where they've said that several aircrafts worldwide could be grounded over the next few years owing to the problems that Pratt & Whitney engines are facing. At the moment, the statement from RTX is that they've provided an update with respect to the A320neo engine inspections. They see a removal of 600 to 700 engines that power A320neos by early 2024. RTX earlier this month said that 200 engines would be removed, and most incremental engine removals required will occur in 2023 and early 2024. Now, due to these supply chain issues, Indigo currently has about 40 aircrafts that are grounded. Out of their total fleet of 316 aircrafts, 136 are powered by Pratt & Whitney engines, and these engine issues could put pressure on Indigo. Indigo has guided for a high mid-teens capacity growth in FY24, but they've also said that they're working very closely with Pratt & Whitney to assess the potential impact that this engine issue could have. Apart from that, Indigo is also facing headwinds on account of higher crude. Crude prices are now at a 10-month high of $92 a barrel. If you remember, on the 1st of September, oil marketing companies hiked jet fuel prices by 14% to 1.12 lakh per kiloliter in Delhi, and ATF prices have seen a rise of nearly 24% in just 2 months. Hence, that would have an impact on the earnings of Indigo as well. And now, the incremental Pratt & Whitney engine issues is something that could continue to keep a lid on the stock.
Okay, thank you very much for that. The other one is RR Kabel. That's the new IPO, which is open for subscription today. It's a 1964 crore IPO, but most of it is going to be an offer for sale by the promoter. So out of this 1964 crore, almost 1,800 crore is going to be an offer for sale. The fresh issue is only about 180 crore. This is a wires and cables company, but largely B2C, and a lot of it gets exported. Surbhi joins in with the details. Surbhi.
Thanks so much for that. So, as you mentioned, RR Cable's IPO opens today. The price band is set at 1,035 rupees per share. The offer size is 1964 crores with 1784 crores for an offer for sale, and the remaining 180 crores is going to be a fresh issue. Out of the 180 crores, 136 crores is going to be used to reduce their debt. Now, post the IPO, the promoter shareholding will come down to 63% from 66%, and TPG Holdings stake will reduce to 5% from 17% currently. Now, it's a wires and cables company with presence in the FMEG space as well. They have 7% market share in the cables and wires space. Of the 89% of the revenues that comes from the wires and cables, 70% comes from wires and 30% comes from cables, and 11% of their revenues comes from the FMEG space. They have the highest contribution coming from the B2C channel, approximately 74%. Now, when you look at the financials, the numbers are pretty strong. The revenue for operations for FY23 was 5,600 odd crores with an EBITDA margin of 5.8% and a PAT margin of 3.4%. They've grown their revenues at over 30% in the last 3 years, EBITDA at 16% and PAT also at 16%. Now, when you compare it with their peers, it's on the margin front that they are lacking. RR Cable's margin is just 6%, whereas peers like Polycab, Finolex, KEI all have the margins between 7 to 13%. So when you look at the valuation, RR Cables is valued at 54 times FY24 PE, which is higher than even Polycab's current valuation. Polycab's is valuing itself at FY24 PE of 47 times. KEI at 41 times and Finolex as 25 times. So the valuation seems pretty expensive as of now. We also spoke to the management about the growth opportunities in the cables and wires space. So let's listen in.
We are raising 180 crores in the company, and out of that 136 crores will be used to repay our debts, and balance will be for general corporate purpose. From growth point of view, if we see historically, we have grown at more than 30% CAGR, and this industry is promising, so we are expected to do well. We have capex plan for the coming 2 years where we have investment of almost 500 crores, majorly to expand our cable capacity and wire capacity. Yes. And even with the current capacity, we can grow by another 30% with the capacity utilization doing better, and with the existing expansion.
Okay, that was the management at RR Kabel, cable. Still trying to figure out what's the right pronunciation. Kabel it is, right?
I confirmed with the management.
You confirmed with the management. Superb. All right, so let's go back to Prakash on this. Prakash, now wires and cables, obviously a very, very hot space. We cannot forget what happened to Polycab after last quarter's earnings, right? Now here comes a new entity. Large part of this is OFS, but the company is profit-making. They've had a decent CAGR, top-line growth last 3 years. What do you make of it, and what would your advice be?
So I think you guys have covered it up very comprehensively, and undoubtedly the space has been electrifying, and no pun intended. It's.
I'm sure you intended that pun, Prakash.
No, so I hope it's to insulate the electricity and not make it very electrifying. But what's the nature of this company's business is very unique in that sense, because they have right from day one they're focused on B2C. So when you're building your house or renovating your house and you want any work around that space, you would go and ask for an RR Kabel product, right? So that is where they have scored, and that's why their focus has largely been on a lot of promotion, in fact, it's a household name even before it's IPOing itself. Unlike some of the other names, the only closest peer that you could compare it with is Polycab, because the others like Finolex and KEI and Havells have much more than just cables as a contributor. So from that perspective, it is expensive. There is no doubt. And the only thing that could get them to sail through is going to be a FOMO. People who haven't made money on Polycab, given the kind of rise it's had after its IPO, probably would want to buy into it. But I think it's two things that I avoid in IPOs. One, if it's largely an OFS, I'm giving an exit to a PE fund or the promoters at some point. And that's not a great idea. I mean, the money is not going into the business as much. And the second is the valuations are a bit stretched. It's in bullish times that you're getting this IPO. Remember, it's not something which you would have seen. Had it been 3 years back or 2 years back, probably the P multiples would have been probably close to 25, 28. And now, right now, it's almost double of that. So I would let it pass. I don't want to make, attempt at making money in every IPO. So this is one of those where I would stay away and let others make money.
We'll ask you when the others IPO opens. There's Yatra opening on Friday, the travel agency OTA, which competes with Ease My Trip and Make My Trip. And then you've got Samhi Hotels as well. So we'll ask you whether you think you can make money there. But Prakash, thank you very much for joining in. Anshul Sehgal, the head and executive vice president at Kotak PMS, is with us on the show. Anshul, I believe you think wires and cables is a promising sector. Now, in that, the stock, as Prakash called it, which has been electrifying, has been Polycab. But what are your thoughts on RR Kabel and the space in general?
Hi, Rima. Thanks for having me. So the space is quite interesting. Clearly, there is a lot of tailwind, both on the infra side as also on housing side. And it's quite evident that the leader has delivered very handsome earnings growth, which has gotten reflected in their stock price performance as well. It looks like there is this tailwind is likely to continue going forward, because we are only at the start of this cycle, both on infrastructure build-up as well as on housing spends, that is household spends to buy real estate. And that bodes very well for this sector. So we are positive on it, and we do believe that this sector has legs.
All right. Hi, Anshul. Good afternoon, Anshul. But what about the markets? What's your view? The broader consensus now at this juncture is that you stick to the large caps, because the mid and the small caps, maybe they party too hard. So maybe a bit of a hangover there. What's your take? Do you believe that, or do you believe still that mid and small caps can continue the party?
Hi, Nigel. Nigel, I believe that a bear market is a bull market where the breadth is quite narrow. What I mean by that is that it's not like in a bear market you don't have stocks going up. You do have stocks going up. Only thing is that those are very restricted. While in a bull market, you have a wide expanse of stocks going up. So it's relatively easier to make money in a bull market and not so in a bear market. Let me give you some numbers. Between 2018 and 19, those 2 years, you had the small cap index down about 36%. that is on a consolidated basis over that 2-year period. However, in that period, you had about 18 stocks in the small cap category. That is 750, that is 251 to 1,000 stocks, 750 stocks. In those, there were about 18 stocks which were up 50% or more. Some were up nearly 3 times. So if you were picking the right pockets, you were making money, albeit on a narrow basis. In this same period, you had nearly 550 small cap stocks, which were down. That is, they gave a negative return over a 2-year period. And the average negative return was 51%. So despite that, you had some stocks which gave you very handsome returns in this same category of stocks. My point being that if you're picking the right pockets, even in the small and mid cap category, despite the rally that we have seen just now, there is money on the table. However, on the broader small and mid cap category, this is a time to be slightly cautious, at least in the near term. However, if I was to look at a 5-year period, I would be extremely bullish on this space because I think that there are multiple factors leading to significant growth in this space over the next 3-5 years. Short-term valuations clearly are stretched, so broadly you should be cautious in the short term. Long-term, very bullish.
Were you ever an investor in defense or the railway stocks, Anshul, at any point of time?
We have been investors in defense and railways both. We were slightly ahead of time. It tested our patience, but it rewarded us handsomely, Rima.
But you exited. Is it a part of your
we are
portfolio
still
now?
Investors.
Or
We are still investors in both those segments.
And particularly
We've
for
trimmed
railway,
our
are you...
positions.
Sorry, go ahead.
We've trimmed our positions. We've booked some profits, but we are still investors in both those spaces.
Okay. And are you looking at trimming, some more profit booking in railway or defense names? How would you, view the, eye-popping rally that we've had over the last couple of months and where the valuations are and what the market is pricing in terms of future growth?
Let me give you a specific example. Okay, we were invested in a railway stock, which we bought at around $20. The stock price was around $20. It had a EPS in that year of about 4 rupees. And it was likely to give a 2 rupees dividend, which means that we had about a 10% dividend yield. And we had a 5x price to earnings ratio on that stock in the year that we bought it. Since then till date, that stock is, it's up to over $160. And EPS is not up so much. EPS is probably that 4 rupees EPS is up to 6 or 7 rupees, which means that valuations are more than building in what the expectation from earnings is likely to be going forward. Now, when this has happened, it only is logical that we should take some money off the table, which is what we are doing. We think that the further upside, if it is to come, will be more compounding upside. It won't be valuation re-rating because most of that has happened. And so this is the phenomenon we are seeing in this segment just now. We are also seeing some exuberance, which makes us a little cautious. We think that much of the future earnings upside is already built into both these sectors that you mentioned. And so that warrants a little bit of a caution.
Okay, all right. Anshul, the sector of the day today is really pharma. The street is clearly getting quite positive. And the rumor is such that maybe a big deal will be announced in September itself. And a couple of auspicious days I've heard as well. But be that as it may, the pharma space is spiking up. What do you like from here?
Pharma is very interesting, Nigel, I think. Pharma has various sub-segments. There is the Indian pharma, which has been doing relatively well over the last few years, and it continues to do well even this year. The tendency in this space to grow is about 10 to 12%, and that's what the street is building in for the market as a whole. The one segment which has come back, and for the right reasons, is the the exports from India to the US and to the rest of the world, particularly to the US. Why? Because what really was happening in US is that many of these generic drugs, they were seeing price declines of high double digits. So somewhere in the region of 15 to 20% price declines. And that meant that many generics manufacturers were reticent to continue to produce these generics in the US. So they backed out of the industry altogether. As a result, there were shortages of drugs in the US. We saw nearly a 7 to 8 year shortage in US generic drugs, some really, highly required drugs. There were shortages in those. And so to attract producers back into this segment, it was only warranted that you had price declines come down. And we've seen that play out this year. What will happen as a result is that margins will go up, ROEs will go up, and this will attract more players to come into this market and start producing again. Our belief is that this is a positive for Indian exporters of generics. It's already playing out in numbers. Some of these companies in the first quarter have shown significant improvement in margins, as also the guidance that they've given is quite strong. We think this trend is here to stay. And so we're quite positive on this segment of the market, particularly Indian exporters to the rest of the world and the US. And healthcare, pathology continue to do well. Yeah, sorry.
So healthcare in good health, basically, as far as the way you're reading things. Got that, Anshul. You know what? We do have to take a break. We want to continue the conversation because when we come back, Anshul, I've been spending some time looking at this rise in oil prices today. Brent is at 92. And by the way, it hasn't let up at all. Pull up Brent prices right now. Remember, today's inflation data in the US as well, consumer inflation data. Our numbers were fine yesterday. Let's see what US consumer inflation does. And this is a concern, 92.63 and climbing on Brent, and even NYMEX is on the higher side. European markets are down about 0.5% right now. We'll take a break. We'll talk about what to take away from this rise in oil prices, and get a quick comment from Anshul on this as well in just a bit.
Welcome back. The Nifty is holding firm above that 20,000 mark. The mid-caps have rallied, and this is despite the rising crude oil prices. Now, logic would tell us that when crude oil prices rally, the Indian equity markets should get impacted because most manufacturing companies use crude oil prices as a raw material, so therefore their margins get hit and that should hurt them. But let's find out what history tells us. What's the correlation between Indian equities and crude oil prices? Surbhi's moved over to the big wall. Surbhi.
Guys, thanks so much for that. So I spent the better part of the day just to go back in history and trace the move in Brent oil prices and our very own Nifty. And some interesting, points came up. This is 15-year data. Basically, I started looking at prices, right from the global financial crisis. So we're talking about September of 2008. And there were three distinct phases when the positive correlation is very, very clear. The first is right when we were recovering from the GFC. The markets kind of, bottomed out around March of 09. Now we really remember that. Equities moved higher and oil prices moved higher. And this correlation went up all the way till November of 2010. And that's when things changed. And I'll come back to that in just a bit. That's the first. Let's move to the second. The next long phase of positive correlation actually happened somewhere around this entire phase. Around 2016 is when we had a positive rally on the equity side. It wasn't a very big, sharp, vertical move, but a long move and largely higher. January 2016 going all the way up to October of 2018. It was a positive correlation. That's the second phase of positive correlation. Let's come to the third phase. That happened right after COVID. Remember March. March is actually quite an interesting month when we talk about history. We've made historic, beautiful bottoms in March. So again, March 2020, we hit that bottom on the Nifty. We hit the bottom on oil prices as well. Oil, of course, didn't move up as sharply as equities, but largely this correlation continued all the way till October of 2021. So three phases where both moved higher. However, there also are three distinct periods of time in the same 15-year period where the correlation didn't exactly work as well. In fact, it broke down. The first such instance happened in February of 2021. Basically, it started from November of 2010, just after that recovery that we were seeing in oil prices. Here, crude continued to rally. It was up about 15.5%, but the market sold off. The Nifty used to be at around 6,300, fell down all the way to 5,200. 16% drop on the Nifty, even as oil went up. So yes, it has happened that oil goes up and our markets do react negatively. But the more interesting aspect is this, that positive correlation completely broke down in 2022. Look at this chart over here. This is the low after COVID, March, which I just described. And we rally nicely together up until here. Then you hit December 21 going into 22, and then everything changes. Look at the way oil has rallied all the way. March 22, it rallied to almost $128 a barrel. The Nifty did not rally. The Nifty started faltering. It fell all the way down to a level of about 15,869. What happened here? Why was 2022 different? The one reason that really stands out is the Ukraine war. When geopolitics came in, that positive correlation literally broke down. I'll just put the numbers up here. Again, because of that, Ukraine event, crude oil prices rallied 85%, very sharp rally from December to March 2022. In the same period, the market didn't fall as much as this, as dramatically as this, but it fell about 7.5%. The Ukraine rally continued in oil prices. There was a second leg of an up move. Let's pull up the next plate where crude oil kept up going higher, 25% higher. This is up to June of 22, and again, the market fell by about 6 to 7% in that same period. So basically, short point, what is history telling us? That yes, there have been long periods of positive correlation, but big events, outlier events like geopolitics can perhaps derail that correlation. What happens in 2023 going into 24? Only time will tell. Well, Anshul, let me make that my last question to you in terms of risk. And I think today when we're looking at the market and we're talking about, risk factors, across the board, people are saying inflation, sticky inflation, US bond yields. Now that's a risk. What are your thoughts today as we see that price touching 92 plus on Brent oil?
Surbhi, I'm a trained equity investor, and I've learned one thing from the greats, say Charlie Munger. He says, invert, always invert. Try and figure out what can be not right in your thesis. And in this analysis of crude, one thing that I figured out over the years is that correlation need not be causation, which means that if there is a correlation between markets and crude oil, it needn't necessarily be because of crude oil. It could be because of various other reasons. And let me elucidate that. Say in the period 2013, when crude prices went up quite significantly, and you saw the Indian markets correct, particularly the broader markets correct, it was because there was an impact because of crude on our currency. I mean, amongst other things, because of crude on our currency went from 51 to 67, if my memory serves me right, in a matter of 3 or 4 months. And that led to FIIs taking monies away from India. And as a result, the Indian markets corrected. But then fast forward to 2022, and as you rightly mentioned, the Indian markets did not correct so much, despite crude moving up so much. And that was because India was able to source crude at attractive prices from Russia. And that did not impact the trade balance of the country as adversely as it did in the past. Secondly, the import bill on crude was almost equal to the services exports that we did from the country. And that again meant that the trade balance was in favor. And as a result, the markets did not react as adversely as in the past. Given all of this, I would say that it's, while it is okay to track crude, but I don't think that we should be making any judgments regarding the markets by tracking crude. And for equity investors, it's always an opportunity to, we always find opportunity in adversity. So we can do that even in this case.
All right. On that note, let's wrap this conversation up. Anshul, thanks so much for stopping by and giving us your comments on the markets as well as crude and the other sectors. But it's time that you all have always been waiting for. It's a little late today, but D-Street Chatter is waiting by, and Nimish joins us. Nimish, what a big move, right? Headline index is holding up, and good to see at least the midcap index move back into the green. What are you picking up?
Hi, Nigel. Good move for the markets, good recovery as well. And this is despite a large sell-off at the leading FI desk. So the feedback in the morning was there is a basket selling, and that too in the Nifty names at the leading FI desk. So even after that, we're seeing a big move, not only in the Nifty, but in the broader markets as well. I guess the recovery in broader market was expected because there was some bit of clarity as well with regards to that hedge fund. So that probably was a bit of a reason for the broader markets to recover. But I guess today's move is largely led by financials, and within financials, the PSU index. What a big move in the PSU Bank stocks in today's trade, and that's backed by FI buying as well. So even yesterday, the feedback was, and SBI was part of my chatter as well, that there is buying interest in the PSU names, and that seems to be playing out in today's trade as well. So a good recovery not only for the Nifty, but for the broader market as well. And I guess looks like the momentum seems to be back with the bulls after just 1 day of massive correction in the broader markets.
All right, Nimesh, let's spice it up then. Add some masala. Tell us individual stocks that you're picking up. What's the news?
Well, a lot of stocks are buzzing in trade, Nigel, right? The first stock on my list today is Granules. A big move in that stock within the pharma names. But I guess this is largely because a large part of the selling from a leading FI seems to be largely over, and hence a big reaction to that stock in today's trade. So that's the first one. The second stock is PNB. I spoke about good amount of buying interest. PNB clearly stands out in terms of massive buying interest from a larger FIs, and that's the reason why a big surge in that stock. I'm expecting strong daily volumes as well in PNB in today's trade. So that's the second one. The third stock is REC. We saw what happened to yesterday across all the PSU names. Sharp pullback in most of the PSU stocks in today's trade, and REC stands out largely on the back of buy flow. So the stock is marginally under pressure, but I guess some HNI flows, some larger family offices seem to be quite active and buying into REC again in today's trade. So that's the third one. And the last stock is JSW Energy. For the last 2 days, the feedback is there is continuous buying coming in from some leading FIs into JSW Energy as well. Remember, GQG couple of weeks back bought into JSW Energy, and since then there is a bit of interest back from large institutions into buying into JSW Energy as well. So that's the last stock on my list today.
Okay, thank you very much for that list of stocks, Nimesh. Let's also get to Mitesh Thakkar for a quick BTST call. Mitesh, what do you have for us?
BTST on Glenmark, which is making a fresh high. Keep a stop below 854. Look for 870 as the target over here. And the other one is Canara Bank, which is a BTST with a stop at 360 for targets of 372.
Okay, all right. Thanks a lot for that, Nitesh. Well, for the time being, we'll slip into a short break. You come back, we'll wind down the markets. We'll also get you some market talk. Welcome back. Well, the markets are holding up. The problem today was the Nifty Bank couldn't go ahead and conquer that high. 45,950, that was the line in the sand. We went out there and we pulled back a little bit. But otherwise, it's a good session. Good recovery from the day's low. Mayuresh Joshi joins us to talk about a lot of stocks. Mayuresh, well, there are a lot of themes that are playing out today. The PSU banking names have done pretty well. You have the pharma names as well. Give us that one stock from either of these two sectors that you believe still has potential from here on.
Afternoon, Nigel. So we continue holding on to Bank of Maharashtra and Canara Bank in our portfolios as far as PSU banks are concerned. But what remains on our watch list would be one of the bigger names. So either State Bank or Bank of Baroda. So Bank of Baroda would probably be there on a larger scale when it comes to the watch list for all the parameters that we probably discussed. Might be a slight compression in NIMs, but the expectations in terms of the advance and the deposit book holding up quite well. The expectations in terms of asset quality pressures, which have come down significantly, should show signs of significant improvement as we move into the next few quarters. And not too richly valued. Yes, it has moved up over the last few weeks and months, but not in overheated territory as we speak. Within the pharma names, in our global focus list, Nigel, we do maintain a positive stance on both Cipla and Dr. Reddy's. A lot of news hovering around Cipla at this juncture, but with numbers that they've probably posted, expectations of maintaining that margins of 23-24%, US formulation sales expected to hold up with 2 key launches expected in the next few quarters, and a large element in terms of the front loading of expenses when it comes to R&D for making the specialty pipeline is largely done with, which means it would be a normalized R&D expense into specialty FTFs and Dr. Reddy's because of their specialty molecules that they're doing from a backward integration perspective.
Okay, all right. Just a quick word. At the start of the show, we had comments coming in from the minister that they don't want to make the 6 airbags mandatory. I did some quick research out there. So Autoliv is the largest producer out there, which is unlisted. Rane Madras, initially we did see a bit of a downtake, but it's very small in their total proportion of their business. And Uno Minda as well, that's the other stock in there that has some exposure. But both these two have it either via their JVs or subsidiaries. And in the entire listed space, it's very, very small. So that's why both those two stocks actually have completely ignored that news and moved to the high point of the day. Quick comment, Mayurish, on Uno Minda in particular.
So looks very interesting, Nigel. 2-3 aspects. One, EBITDA margins at 10.7% for the quarter gone by, expected to be maintained at those levels itself. The mix that they've got, switches, lighting, castings, acoustics, and obviously I think what you're talking about in terms of the charging equipment, the new products that will probably come through, specifically in terms of 2- and 4-wheeler wireless chargers. I think that can be a huge value addition as we move ahead. And a large element in terms of the capex that they're probably expected to do, 6 factories order that they probably run, and top line, bottom line growth expected to be extremely steady as we move ahead, makes it a very, very compelling candidate.
Mayuresh, short conversation, but coming to the close of markets ending today. Thank you very much for joining in. It's going to be a positive close. The Nifty is closing above 20,050, a gain of 63 points. But the rally faltered to some extent in the last half an hour or so. Sensex higher by 250 points, getting close to 67,500. The midcap staged a remarkable recovery from the day's low. The midcap index rallied close to 1.5%, and the banks were the outperformer. The Nifty Bank rallying 400 points. The PSU Banking Index gaining about 3.5%. The big winners include Coal India, Grasim, Bharti Airtel, a record high. Consumer names like Tata Consumer, Titan, up and about. In the banking names, you've got Axis Bank, State Bank of India surging. On the losing side, HDFC Life was the top loser. Softness seen in auto names like M&M, Hero Moto, Aisha Motors, L&T, Adani Ports also ending in the red, and a couple of pharma names. Broadly, pharma did well, with Cipla Divi's ending with a cut of 1%.
Well, that's as far as the large caps are concerned. Mid-caps have managed to stage quite a recovery today from the lows of the session. Talk about some of the big movers and shakers, and really it's financials leading all the way. Whether you are looking at some of the PSU names like IOB, PNB, Central Bank of India, all of these stocks have rallied between 5, 6, 7, 8%. So big day for a lot of them. Even JNK Bank, for that matter, has been up and about. RBL Bank. Basically, financials across the board. Tier 2 financials. South Indian Bank, about 4% higher. Very strong day for some of these names. In addition, IOL Chemicals has had a stupendous rally. 20% move on IOL Chemicals today. GMDC has managed to put on about 11%. Big mover as well. These are some of the other highlights that really come out. Trident, NMDC, interesting move on these stocks as well. The railway names were still subdued. Should just add that. They cut their losses from the morning, but nonetheless are closing largely negative. Ircon, IRFC, these stocks are down between 4 and 5%. Zomato cooled off today as well, about 0.5% lower on that one. But all in all, a decent recovery on the mid-cap side of the market, and the Nifty managing a close above 20,063 to be precise. Okay, with that, it's a wrap on this edition of Closing Bell. Thank you very much, and thank you for joining in from the entire team. But don't go anywhere, because our special offering, Indianomics, is coming up next.